the first is, yeah. So quickly, the first part. Okay, this is just about Blink Invest. So I already spoke to you that we have invested 400 crores, multiple exits. This is my current portfolio, which is live. I've not put the portfolio which is not live, and we are very co-founder approach. We work very closely with our portfolio companies, right? Obviously, you must have heard quite a bit about the startup discussion, and specifically during the COVID. I wish I was a founder because every next door, even my neighbor would say, I've started a startup. They would raise between 5 million to 100 million. And it's crazy valuation. And they would really love this because the salary went off the roof. People started saying it's COVID. Let me shift our homes ranging from Lonavala to Dubai as well. And investors were funding this. There was too much of liquidity right while we were at home. And that was a crazy times which it went through it, right? And India, as we speak, is obviously the third largest system in the world. So it's been really very large and it's been growing extremely extensively as well. A pure numbers, out here is, which I think the key statistic which we want to really highlight out here is the overall valuation of all the companies, whether we call the word unicorn, which is $1 billion above, unicorn is $100 billion above, all these are very different names. It's 650 billion dollars. So it's quite large ecosystem. Total they've raised $164 billion. Again, as I mentioned, is very large numbers which we are talking about, and 100,000 companies have been funded, at different stages. So this ecosystem is very large. It's not what we saw, probably 10 years back or 15 years back. And when we look at the other slide, I'll try to give you, because I've been in this industry for about 20 to 25 years. So it's very interesting to see how things have changed over the last, I would say, a few decades actually. So if you really look at this history from 2014, where we have about $5 million been raised, sorry, $5 billion, and then how it went up to raising about $42 billion, right? But if I look at few phases of this, and I'm talking about in 2000, if you tell anyone I want to raise private equity, venture capital, there were none, actually none. It was only ICICI Ventures, and they also had a tie-up with TWC or something like that, to an extent LFNS, and that's it. And real literally there were none, right? There could be one or two. 2002 or three, I would say HDFC incubated something called True North with Mr. Ashok Wadhwa, and that's where it was born. And they did it decently well, because I remember still that the first fund delivered some 8x return or 6x return and about 60% IRR. And when we looked into 2006-7, when I was heading ICICI's, I would say, private equity fund of funds, at that point of time, to be honest, there were Chris Capitals of the world, which is a large PE funds, True North, Barings, and maybe about a handful of more. And literally, that ecosystem was that there was money, but there were very few PE funds who want to really fund it. But I think the most interesting part is a history between, I would say, actually between 2014, 15 till 20. I think this particular phase, which is almost like 6 to 8 years, when the entire ecosystem grew, while we don't see a lot of funding happening, but I would say the number of private equity funds, the VC funds grew like crazy. Like K Capital, which was by Sasha Capital, part of Mumbai Angels, or Bloom Ventures. Again, some of the team members were part of this, and I can name lots of them. I can lots Excel, Safe. All these VC funds were very small. Chirates, which was earlier IDGs, IB Capital, all of them started, right? Some started with $10 million fund size, some started with $20 billion. And all of them went through 2, 3, 4 cycles of investing, exiting. And this was a phase which I would call a consolidation phase, where I would say, at least the things came together. And that's the time when we saw quite a bit of capital. And suddenly, obviously, the COVID definitely made a difference. And this particular phase is when I would say they almost use the word called emergence of a VC and a private equity category emerge. Because if I look at between 2016 and 20, there was nothing like VC, or what was the concept of private equity. Like 2015, 16, there were few angel groups got formed. I was an investor in something called One Crowd that got formed, or Let's Venture was already there at that point of time. A Venture Catalyst, which we must have just got formed. So that's 50, I would say more like 17 till 21. A lot of these angel groups literally, mushroom, and it almost was in every city and state. I would say some or the other angel group formed. And today, as we speak, I would say the good part is we've seen, I would say, quite distinguishment between three, four large groups within the VCP world. We've got a lot of angel funds where we want to raise between 2 to 5 crores. We've got a VC funds who will, from where you can raise between $2 to $8 million. And then we've got mid-market funds, which is a growth fund where you can raise between 10 to 25, and then a buyout funds, which is a new category, which is just emerging. This is the curve and it is emerging. So even the Indian VC private equity, I would say over a probably 20 years, not only have growth, but they've matured. There is a clear demarcation between different types of investors, different types of groups. And we've also seen industry-focused funds. We have healthcare-focused fund. We have health agri-focused fund. Like we have a financial service, a fintech-focused fund, and like us, there is education and financial service funds as well. So this is where India is now becoming more and more aware and matured category as well. And this is, I think, the most interesting phase of VC private equity world, because uh, in the last few years, a lot of people raise money, but not necessarily have delivered returns to the investors because of multiple reasons. And that would be a very, very interesting uh, to see that how many of them will survive, how many of them will grow, and what's the new era of the VC and the private equity world. This is nothing else but different types of unicorn and which got created. And as I mentioned, unicorn is almost like a $1 billion valuation. And the good part is across various different sectors. It's not only focused on one or two sectors. There is in financial services, few in education. Obviously, few in education have died as well. But it's quite interesting. And I think what is really interesting is this particular phase, because what is the biggest question and the biggest challenge, and this has been true till 2019 and 20. And whenever we would go out and raise a fund, investor, the opportunity is great. Why? How you're going to exit, right? And to be honest, there were very, very less answer to that. Like, okay, we'll exit through M&A, some strategy will buy, but there were very, very few. The good news is that today, because of the vibrant IPO market, a lot of these companies now got listed. So a listing has become an extremely interesting proposition for someone to exit. SME listing is also becoming a very, very interesting area for everyone to exit. But more important out here, we've seen, because of the demarcation of the VCs, the Ps, and the buyout fund, what we are really seeing is that we're seeing M&A exit, that people are doing mergers and acquisitions, big companies buying smaller companies, but even the large P funds, when they get into, they want to wipe off in a good way, because in the angel investors or early stage investors, because that's how we, as early stage investors or angel, may get returns as well. So exit ecosystem has also matured, I would say, within the last specifically 4 or 5 years, which is, I would say, very, very interesting phase. And that's where we seeing a lot of these companies are growing, and more and more money is coming in this particular opportunity. Uh, this is the different phases of the startup funding life cycle. Pre-seed or seed are almost like angel investing. When I use the word pre-seed, is two friends, three friends meet together. They brainstorm the ideas, as people say, over a coffee, or maybe in India over a chai, and they like this idea, and then say that, okay, that's the concept. Let me see if someone is ready to put some money. We don't mind diluting a reasonable large equity. Uh, and the reason the reasonably large equity, because they have to prove the concept and work on creating the models and various other things. Uh, you know, uh, and that's where the valuation can be 10 to 20 crores. The fundraising has gone drastically up. The average is, while it's 9 crores, but I would say generally we have seen between 1 or 2 crores is what they raise, because it's a small amount they want to raise on this. Seed is when they've got a concept in play. I would say they've got the concept in place. They've worked on the product model, GTM, or some of these ideas, but they want to roll this out. And that's the time when they would raise between 5 to 10 crores, because there's something to show to some of these investors who want to put, as I mentioned, 5 to 10 crores. And the valuation can be 20 to 50. At the same time, during the euphoria phase, we have seen people at the seed stage, depending on the entrepreneur and their background, they raised between anywhere between 50 crores to even 100 crores during the seed stage as well. So we've seen some of this extraordinary event as well. Series A, pre-series A is when the product has been proved, there is a market to this, the GTM this. Generally, they've been doing revenue between 50 lakhs to a crore. And that's the time they want to raise between 25 to 100 crores around this phase. And there's always a clubbing between pre-series A and series A. And this is a time the companies are not making profit. The valuation, as you would see, is between 50 crores to 200 crores is the valuation which, I would say they would mainly look at raising fund. And post that, I think while they're making losses, but they're growing as well. Series B is the time when they are break even, almost getting into a profit phase. Obviously, there are certain levels of companies, and we know, ranging from Nykaa to Zomato to a lot of these companies which are yet to make profits or just made profit as they went to public, because they look at this business how they used to look at Amazon, which is a 20 years don't make money, but just grow the business. And once you have a market size, you almost create a monopoly out there. But that's are more as an exception. Uh, as we speak, most of the investors are now looking at sustainability with a reasonable growth, and profit is becoming a very, very important part of it. So Series B is the time when a lot of things have been proved. The company revenue ranges from 150 to 300, 400 crores. The raise is between 80 to 200 crores, or sometimes even more as well. And then the next phase of growth, there can be Series C, D, E. There could be getting listed in public market. There are various forms of it, which appears there's this. But broadly, this is the maturity curve in which people raise the money, at different stage. And we as angel investors come between pre-seed and the seed stage as we speak. Uh, this is the last slide before I pause for any questions, but this is just, there are VCP funds, some name, there are corporates which have emerged because they also realize that some of the early stage company are disrupting their own businesses. They don't mind taking a stake in this and learning from them. Then the accelerators and incubators which support them for ideas and different other things. Angel network we spoke about. And I think because lots of people have made tons of money, a lot of family offices have emerged over a period of time as well. So I think this market is just starting, in my view, is getting matured, and everyone is coming out with their own value system, themes, and approaches of doing things as well. So I'll pause right now. Happy to answer any specific questions. Any questions? Anything? Am I on the right track? Anything you want to talk about? I'll pause right now.
Hey, hi Amit. Thanks for such a good introduction. A very basic question. So just a background. Uh, I have worked with startups for the past 6 years now. So I have a bit of an inside understanding of how startups operate, and I've been part of 0 to 1 and 1 to 10 journey also for three of these startups. If I specifically on the slide of pre-seed and seed funding, uh, mostly as an employee, if I want to talk about, and which would go true for as an investor also, is ki, how do we evaluate an idea? So people come from different backgrounds before their MBA also. Some may be, say, just like you, maybe some may be from a CA background, some may be from economics background. I myself am an engineer. It's becomes very tough to evaluate an idea, and I've struggled for this for 2.5 years when I took a very calculated risk to join a pre-seed startup in its very infancy days. So how do you, or how do people evaluate uh, such ideas when the product market fit is very far ahead? It's still in idea stage. You're still not sure about the execution, and leave aside the worthwhileness of the idea and all these other things.
So, well, So that's a question which I would put it across to everyone. Like, is there a research? Is there a science around valuation and all this? I'll be super honest. There is no science to this. There's no
Okay.
art to this. कुछ नहीं है इसमें. And I would put it like this. And this is so interesting, and it's a very interesting question. So right in the middle of the COVID, when I went out and raised a fund, we thought we want to raise a small fund, only 100 crores, because पांच company में डालना, and that's a sweet spot we would prefer. So our style is every 4 years, just raise 100, 200 crore fund. That's it. Nothing beyond. That's the sweet spot we got it, right? So it was just in the middle of the COVID, and we thought that 100 crore का fund करेंगे, पांच company में डालेंगे, and we'll put about 5 to 8 crores as a starting check, which is a pre-series A,
जी.
and we'll reserve some money for follow-on. Within 1.5 year, things change. The pre-seed, where people would give me just before the COVID, anywhere between 15 to 20% stake, the stake just went crazy. So today, if the company is doing even 25 lakhs of a revenue per month, the
जी.
same company before COVID was valued between 30 crores, 50 crores. It just got valued at 100 crores to 200 crores as well. There was no art, there was no science, and we just couldn't get it. And what has happened is that while there are euphoria which continued for a while between 21 sort of till 24 as well, but post that as well, the euphoria has come down, but the base has definitely moved up a notch, right? That today,
Yes.
if a company comes and tells me at a paper stage want to raise, let's say 2 crores, what it be valued at? The companies which are getting valued between 30 to 75 or 100 crores as well. There are only few bunch of founders where they are low valued, and I'll tell you where they've got very less experience, or rather no experience. Uh, they're not confident about fundraising. They don't have the right ecosystem for fundraising. But saying that Zepto is a very classic example when there is tons of money, when they had zero experience on that, right? And why will someone fund so much of money to that company? All of us are getting benefit as a consumer. I
Yes.
don't know about the VC or the PE world, right? So what I'm trying to put it out here is that there's no science to this, and forget about that. Even a profitable companies, till it get listed, there's no benchmark. Listing also, it goes varies to people to people. Like for example, even within financial services, uh, certain companies which are NBFCs at the bank are valued at 4 to 5 times of book value, or even 6 times. Some are 3 times, and ऐसा नहीं है, fundamentally बहुत ज़्यादा difference है.
जी.
Growth भी है ये. So this is little bit of market demand, little bit of craziness. It's a FOMO, little bit of, I would say, everything is what I would look at it, right?
Yes.
On this.
Understood. Fair enough, Amit. Fair.
Yeah,
And Shubham will be coming into that detail. Amit Bhai has a dedicated slide for that in the future as well.
sure.
What are the
Sure,
major
sure.
elements which we look at it? So you'll get some idea. And as
जी.
Amit Bhai kind of highlighted, right, the situation is very dynamic, right? So in
Hmm.
COVID, as he mentioned, every Tom, Dick, and Harry was getting funded. And right now, the pre-seed criteria itself, if someone comes to me for investment, and if they're doing
जी.
like less than 1 to 2 CR of revenues in a year, we won't even have a look at it. Because what is
Yes.
happening is the mature founders, they're bringing that first initial capital themselves, bringing it at a certain level, and then they're coming up for professional help, right? So
Okay. Yes. Yes.
so it's very dynamic, it changes year on year. That's why, it needs to be, you need to have a pulse to the market, see what's going on currently, kya chal raha hai. That is how you kind of, keep abreast of all the latest happenings which are happening in the market.
Yes. So one follow-up question. Sorry if I'm taking up time.
No,
So
no, no. See, so guys, I would love this Q&A, because as I mentioned, it's a learning for all of us, right?
normally
What's
what
on your mind is on everybody's mind, more or less.
thanks, buddy. Normally what you hear in media or across everywhere is ki startup investing is a fairly risky game. So you invest in 100 startups and say out of 100 only two or three odd perform, which is in very contrast to Blink's strategy of say investing in five, a very concentrated portfolio. So reasons for this, the homeworks that you guys do, or different horses for courses sort of scenario ki something works well for you, and so what any would like to hear your input, Amit, Harsh.
तो यार मैं क्यों क्या करता हूँ इट्स सो डिफरेंट सो सी आई ओके फ्रॉम माय हार्ट आई एम नॉट एन इन्वेस्टर आई एम फ्रॉम माय हार्ट आई एम एन ऑपरेटर राइट एंड इफ आई एम एन ऑपरेटर मैं बोल रहा हूँ यार मुझे एक बिजनेस से बोर हो जाता हूँ चार पांच बिजनेस मुझे अच्छे लगते चलाने right and that's how my mind works second is that if I can't add value then I would rather invest in a public market which still in my opinion will deliver for next few years a decent return for all of us on this piece so you know that's how I would look at this right so it's just about very individual driven है ना some people say I want to buy companies some say यार मुझे ये करना है it's very individual or what you believe in like if you really look at it in the word blink stands for bringing light into the companies
To add to that, Shubham, most of the advice which you'll see in the public, right, it's extremely contextual. So what they are saying, it might work for like very early stage companies where you put in like 1-2 lakh rupees, that kind of stuff. Amit Bhai comes at a much more later stage where kind of, there's some proof which is there already. So to give you an
Okay.
example, there's a company which I'm currently working with in Bangalore called Neocred. They're already at 100 CR plus revenue, right? So I
Okay.
can't invest or I can't work with 100 such companies. I need to work with only 2, 3, 5 handful of such companies because the kind of support which is required and the kind of guidance which is required over there is going to be significantly higher compared to an early stage. So generally what happens is early stage where you do like a batch-based approach, cohort-based approach, 15-20 startups ko kar diya, then you guide them and then take them to the next level. And the same when you reach at a growth equity kind of a stage where they are raising $5-10 million, there you work with a handful of companies and take them to the next level. So, each and every advice is contextual. Media में PR बहुत होता है. So, you need to kind of be very judicious about what you listen to and what you don't listen to because media वालों को आप जो पैसा दोगे बोलने को वो लोग बोल देंगे. So that's why, you need to be very careful about what they're doing over there.
Yes.
cool yeah so any questions otherwise I can continue with my presentation as well
Yeah, sorry,
Please, please.
one quick question. And
sure go
so,
ahead
yeah, like when you're investing at a seed stage or pre-seed stage, like you said, those ideas are not yet proven. There's just ideas on paper and execution is required. So, how do you evaluate like what is the market for it, or whether it would be successful or not? I know it is little similar to what Shubham has asked. But like, are there any specific parameters that as an investor you look at, or maybe the lessons learned, with your immense experience in investing so far,
sure
certain parameters?
Yeah, Ravi, right? I have a slide on that.
Okay.
Probably I'll try to cover this answer from different lenses, if it's okay with you.
Yeah, definitely.
Okay. Any other questions? Okay, great. So let me just continue with few more slides, and again we'll sort of pause out there on this. Yeah. Right. So what is angel investing? As I think briefly we had discussed this. It's something very much at an early stage. And the early stage again is relative. It could be at a paper stage, or it could be a stage where he got 3 people ready. They did a market research and there is a lot of demand for that. Or it could be even a stage where the product is ready and they need some more money to grow this. There are different stages to this. And you must have heard the concept of bootstrap as well, and the reason is because they don't want to raise money at a very early stage. The reason is they don't want to dilute because they do believe in their idea and the concept a lot. So most of the time, it's an angel investing, and I'll try to answer your how do we choose out here while it's there. There's one more slide out here. It's that they write a small check on to prove a lot of these different things. Generally, the investors who are investing are between friends and family and known from the ecosystems, or as we said, as I discussed earlier, that there are angel network which have sort of emerged, and like we are soon going to have a formal NMMS angel network as well. So people will come and say, you know what, this is what we have. Can you fund this as well? At this stage, obviously, the rewards and the risk are very, very different. Here, the expectation is that if this company cannot give me 10, 20, 30 times multiple return, why the hell I should make investment? Because the risk that I'm going to have is very high. A lot of company is going to die. And literally, yes, because not necessarily everyone is going to exit, able to, sorry, not exit, everyone is able to execute it very well as well. And this is the phase when I would say very, very critical, because if they have the right mentorship, if the right network, and it also builds the credibility of the founders. And just giving you a few perspectives, if any companies which have got funded by Y Combinator, this is a US-based sort of angel network, the credibility is there that only founders of top quality companies, whether it is Airbnb or it is Uber or some of the large names, are allowed to be part of the ecosystem to fund it. And if you get funding from there, it just opens the network, the ecosystem, the mentorship, and everything. Hence, at this stage, even the founders are very, very cautious, or very, very thoughtful with from whom they want to raise. So, giving you an example, what I've observed, if you're in a financial services and you know that a lot of relationship you're going to need on to open banks, then they will try to raise people from the banking ecosystem, because if for example, I've been working on ICICI Bank, I've invested in a company, at least I will try to navigate or introduce to the right person, because that's where it helps. So one thing is very, very important, that today, if a startup is there, hey, I can raise money, or someone is going to add to me to the revenue bucket. Founders will always prefer not the money, but the revenue bucket. The reason is, if you have revenue, you can still raise money. But if you have only raised money and no revenue, you will not be able to raise next time money. So that's how the founders many times prioritize the network, the credibility, and the mentorship as well. And this, in my opinion, is something becoming more and more credible as we speak. It's not only about raising money, but it's also raising money from the right ecosystem. And this is again a trend which has emerged in the last 6-7 years, and merely because of availability of capital. It's directly proportionate to that, actually. I'm sure you would have heard of this, that a lot of people have made tons of money, 1,000 times, 100 times. So many, many such stories is what we have heard. So I'm not even sort of getting into this piece, that how much tons of money they've made in each of these companies, right? Why invest in a startup from an investor perspective, right? One is purely from a portfolio allocation, right? And my recommendation out here is different. It can vary from people to people. I generally wear a very high risk, high gain approach. So don't consider me, because if you ask me, most of my portfolio, I would say more than 50% of my portfolio is in early stage companies, which should not be the case, right? But if hypothetically, putting a number to this, and I'm talking about liquid asset, if someone has few crores of liquid assets, they're earning a decent amount of salary. Let's assume for a discussion sake about a crore per annum. Then I would say, hey, should you invest 10, 15, 20 lakhs in the startup ecosystem every year? Absolutely yes, because this will give you the little bit of a diversification. There is a possibility that you may earn extraordinary returns as well. But from a pure portfolio, from an investor perspective, edges, it's like, hey, you have money. What you will do is, you want to beat inflation. You will try to invest into something on the public markets. I'm not getting into whether you invest mutual fund direct, but public markets. I need more diversification than some gold, some real estate. And now we have got one more asset class, which we call it alternate asset classes as well. And this is where I would say, as a part of your wealth bucket, is where you can invest, because it does have very, very high return potential. As I mentioned, it's a portfolio diversification, and my recommendation to everyone would be alternate asset class, which is high risk, high gain. Anywhere between 10 to 20% is prudent, depending on your base portfolio being large. That's purely from a wealth perspective. The other part out here is that it also like keeps you active. What's happening in the market, right? There are a lot of things to learn, and nowadays, okay, I'm giving you my live example. I've invested in a company uh, where we have got young bunch of guys fresh from the college, and I'm invested in company which are people with 20, 30 years of experience, right? People with 20, 30 years of experience, when they look at implementing on the technology side, the cost is could be between 1.5 to x larger. The time is different. But when I look at some of these young guys, they work on so much of new edge different tools at one third, one fourth of the cost, and the way to implement is at a different level. They've not even like different. The big that's one. The big difference is earlier guys used to use Excel sheet, and the new age guys, what is Excel sheet? I'm giving you access to dashboard. Don't disturb me. You want this 20 information? Here is a dashboard. So a lot of new things we learn from them, ranging from tools, marketing, new technology, how things can be done easier, how to manage the systems. And yes, they still lack the maturity. So some of this access to innovation or all these are very, very interesting things. The other part from an angel investor, as I mentioned, you have a domain knowledge, you have a functional knowledge. It's good to, or it's very interesting, or it's at least very satisfying to me when we speak to some of these entrepreneurs and give them some of our experiences as well. So it's a combination of learning at both end, involvement, and keeping ourselves even busy. And that is also one on the softer part to look at why would someone invest in the early stage company. Purely from a risk perspective, I did mention there are high failure rate. Specifically in early stage company, the success rate is just about 5 to 10%. 10% also you can be lucky about that. Liquidity always going to be a question mark, because let's assume we invested 5 lakh in a company. By the time they achieve even 5 crores or 10 crores of revenue, it may take 2 years, it may take even 8 years of the time, and the founder is still not giving up. We need money, not necessarily we'll get money because they've not raised money, but they're still surviving and doing everything to meet the needs, to ends meet. Because of large failures, two companies can deliver 100x multiple, and all our companies can fail. I don't know how many of you know this, but Chris Capital, which is in the sixth or eighth fund, I don't know what fund they're into, and Ashish, the one who had raised his first fund, all his company died. There was only one company which solely survived, and God blessing, luck, his effort, mix of everything, that one company not only returned the fund but delivered a good return. And thereafter, it raised series of funds. Market timing, absolutely yes. If someone would have invested in 2020, 21, 22, crazy valuation, 40% up, 50% up, 150%, 500% up valuation. Today, we are seeing the same companies available between 10 to 200% down valuation, merely because they've not performed, overvalued while they performed as well. Multiple things. The market timing is always very, very critical. Disruption of technology is unavoidable. It's very clear that in the today's DNA, what is today's technology will completely change. And obviously, there will always be a question on regulatory and compliance. And we've seen as late as or as early as few days back when the entire, I would say, the gaming market got closed, right? Everyone has changed the model just because the company thought of, the government thought that this is not where we want a youth to be in. So regulatory changes does make a huge, huge difference. And in India, definitely the regulators are really becoming extremely active, specifically in financial service. And there was also, but also in the education sector, because there was a phase and a lot of mis-selling was happening. And I do remember that almost every company received a notice saying that don't mis-sell. Okay. And there were quite a bit of do's and do out there, and they're becoming much more harder or much more stricter or much more vigilant than what they were a few years back as well. I'll pause right now because some of this are almost I've spoken about this, but if there are this evaluator startup, I want to keep it because that could be a very interesting different topic, but probably I'll pause. In general, any questions around there, happy to discuss out there.
Hi Amit, Trisha here. I passed out of an MIMS in 2023 and have experience of around 2.5 years. So as a, I would say youngster, I always wondered how to find these startups where, we have an opportunity to invest in them. So I never got a concrete answer or a solution to that. So if you could guide how this can be done.
So you want to invest in a startup, so you want to understand from a deal sourcing perspective or from an evaluation perspective?
Sorry, what was the first thing that you said?
I meant to say how to, when your question more related to sourcing a deal and how to write a check, or your question is more of how to evaluate a startup?
I think both would make sense, Amit, if you could respond.
Okay, then I've got two slides on that. Probably we'll pause on that if that's okay with you, because the slides actually talks about that. And thanks, Harsh, for recommending to add the slides as well. I know Harsh did add the slides, so thanks for that. Okay, any other questions? Okay, so maybe quickly jump onto the two slides or three slides which are there. I think that should sort of answer some of your questions on this as well. Yeah, I think there were a couple of questions around this. At different stages, there are different approach to evaluation, right? There's no right or wrong of how to evaluate a startup. If there is someone who's an angel investor, अगर आप देखो प्रॉब्लम सॉल्यूशन फिट ट्रैक्शन बिजनेस मॉडल कुछ समझ में नहीं आएगा, राइट? मार्केट साइज कैन बी सो रिलेटिव, हु न्यू व्हाट्सएप का मार्केट साइज क्या होगा, राइट? सो एट दैट पॉइंट ऑफ टाइम most of the time is on a gut feeling and the evaluation of the team, to be honest. but आप intuitively market size कर सकते हो, यार ये इंडिया की साइज है, ये पॉपुलेशन है, but very difficult if, and specifically if you are disrupting, like who knew, who can evaluate the market size of Zomato, right? Who can evaluate the market size of Uber कि ये हो जाएगा, or Ola, or Oyo, or whatever it is? Very, very difficult, to be honest. So a lot of these companies is more of a gut feeling, and this is also part of the changing the user behavior. And when it is part of changing user behavior, it's a very different ball game, actually speaking. So if you really ask me, at a seed stage, it is more of comfort with the founders and a gut feeling, यार हाँ ये कुछ अलग कर रहे हैं, यार यार हमें ये प्रॉब्लम हुआ था तो ये सॉल्व करने की कोशिश कर रहे हैं, right? That's how a lot of things have emerged on this. But when we would invest in a pre-series A or series A, even at that point of time, 50 lakh 1 crore की revenue हो चुकी है महीने की. There is some traction, there is some team, some truth to this. At that point of time, we surely look at how large is the market size. But most important is this truly a scalable business or not? Because क्या होता है ना, a lot of times on paper it's a large market size, but not necessarily a skilled or a scalable business for multiple reasons, right? Because like for example, people will say India का TAM तो इतना बड़ा है, but all of us know between 30 to 40% of India's population is below the poverty line. So on paper it can be a 100 crore की आबादी, but not necessarily everyone is affected, right? Or if you come out with your luxury shop, right, where one shirt costs you 10,000 rupees, it's a very small percentage who can afford that, right? So that's the time we have to be sure that, hey, what is the market size, but in true sense, what is a feasible market opportunity, right? Intuitively, it could be a bigger, but how many of them will take this up? I think that is something which one has to really understand at this point of time. Founder evaluation is always, always, always important. There's no question about that. But pre-series A, series A, apart from market size, is the ability to execute, ability of the founder to really make an org. Because क्या होता है ना, when they're doing about 50 lakhs to a crore of revenue, at that point of time, they've not really created an org. They'll have this 2, 3 founders, a lot of bunch of early stage, early experience folks out there helping them. And now they have to build the next level management team. And trust me, most of the team fail because of not money, not about the opportunity, the ability to hire the people. That's it. And it could be multiple reasons. One is People are not getting attracted. Founder is too difficult to work for. Not able to hire the right people. Enough enthusiasm nahi kar raha. It could be multiple reasons out there, right? It could be as simple as wrong prioritization. Yeah, very strength. I don't have a strength in a particular area. Is it advisable to hire here? Or somewhere I've got a lot of strength, but I will build my capabilities here. These are the questions which they keep on answering. And they could be as simple as that, oh, I want to hire someone who's a CTO. This is not my expertise, but the CTO wants 80 lakhs of salary. As a founder, I'm not taking with 2 lakhs of salary. How can I give him 80 lakhs? Now, these are all the reality. Hence, org building is very critical. This is the time when you have to start building processes and systems. And I know for sure a lot of people fail because they don't believe in MIS. यार ये क्या data? मुझे मालूम है सब कुछ. Oh, I know this because it's my company. I don't think so it works because this is time you started becoming away from the customer. Can be B2B, can be B2C. You need data. You need again and again prove why this is happening and not happening, right? This plays a very critical stage. This is between pre-series A, series A. When we go to series A, B, what about that stage baby? That's the time is path to profitability. Can it be consistent growth of 50%? That's the time when we talk about competition. That's the time we talk about many other things as well. So this is a process which keeps on exchanging or becoming additive in nature as the company becomes mature. And it's true, there are founders who are very good to create from 1 to 10, but not necessarily 10 to 100. There are founders who are great from 1 to 100 and not necessarily 100 above. And we know what did Google did. They were technical people, right? What they did is they didn't be the CEO. They hired someone else to be the CEO. Steve Jobs was a CEO for a while, but he always stepped back because he had other guys to help him or to execute. And that's been true for so many companies as we speak, right? On this piece. So that's is very critical, in my opinion, this particular aspect of evaluating and all that as well. Uh, you know, uh, I've got quite a few questions out here. Okay, yeah, there's more of the. Is it not helpful to be on the wrong side of the age while looking for it? From the example that you gave about approaches by young folk is expense stage. Yeah, to be honest, it's a mixed experience. Sometimes if you're old, okay, let me put it in a different way. If you become old and you operate from I know it all, or one becomes less flexible, experience can be as detrimental as the young guys as well. And young guys का detrimental can be they're so immature that आपको लगता है यार ये basics also have to teach them, right? Oh, this is so basic, why they don't get it? So it works at both end. On this, sometimes young guys can work 20 hours a day, and that's what a startup is required to do. Sometimes when you come with deep experience, you don't want to do the same shit what you did when you were 21 years or 22 years, knock the door, request, plead, everything, which the young folk don't mind doing it as well. So everywhere it's a pros and cons depending on what minds share you are working with, from which product you are working with, which is a model you are working on as well on this. I'll pause because this is a very critical slide and I know there were quite a few questions. Happy to answer.
So the seed or pre-seed would be coming at one, right? Like we generally look for strong founders with the vision, grit, and these things. So that's where the seed funding comes in, I believe, right?
I mean, it was a strong strength founder is across the board, right? And as I mentioned, the founder has different ability to work at different stages of the company, right? And that needs to change. And a very simple example, which I keep on giving to everyone, when it's a 1 crore revenue company, you don't need a CFO, you need an accountant. When it's a 15 crore company, probably you need assistant finance manager, a chartered accountant will do things well. 50 crore company, you need a finance manager. 100 crore company, you need a finance controller. 300 crore, you need a CFO. Because the roles and responsibilities of people changes as we move up. When same thing is true with the digital marketing, right? If you are just launch a company, you need a performance guy who will start giving you good leads you can work on. You don't need a digital marketing head who will talk about strategy, because what you need is, yeah, give me some revenue. It's okay to have a higher cost, but at least let me build the traction. Let me see what a paying customer are talking about, right? So in my view, it changes as you know, in different stage of the company, and that's where the agility of the founder, the flexibility of the founder, knowing what to do, when to do, plays a very, very different uh, time as well.
Yeah, I mean, from an investor point of view, the only thing that would be available at a seed or pre-seed stage is to look at how the founders are, or what experience, or basically what they bring to the table, right? Because beyond that, we may not be able to see the product, or maybe if you see it would be an MVP, so to say. So
Yeah, no, I
the
agree with
primary.
you. So Ravi, it's experience. Sometimes even if you don't have experience, the homework that founder has done to prove this concept. Or third is, it could be, as I mentioned to you, a new concept. But think about Zomato, right? किसी ने सोचा ही नहीं था when they would have pitched to the Info Edge team, right? Mr. Sanjeev Chandani, who would have thought that this idea hoga, and someone believed it, right?
Yeah.
So at that time, it could be even a merely idea. Yeah, at least this guy is thinking something different. Let me see if it works, right? It could be multiple areas, and again, also depends on which type of investors, what type of mindset they have. Also, it's also about the risk capital that you are ready to put in.
True. Yeah, totally understand. Thanks.
I've seen one more question. The alumni group of IIT, I am also, uh, to be honest, I've seen mixed response on this piece. Yes, that's true that some of the top PE and VC funds prefer that pedigree, but we as a fund never necessarily believe in. See, guys, uh, end of the day, it's all about execution, right? Haldiram is the biggest business. Kya pedigree thi? And we can talk about hundreds of such businesses which are very, very large. Uh, and I still believe, and I truly believe strongly on this, that end of the day, business is all about execution. And if it's all about execution, means flexibility, openness, common sense, uh, focus. All these are very, very critical thing. And sometimes the DNA of and that's individual DNA plays a very critical role. You are from your mindset a product guy, right? So even if the revenue is not happening, you will try to improve the product, but not necessarily don't get into sales, because that's a difficult part. You're not the guy who will build a sales team, or you can't do deal, right? Other side, there are guys who do sales, they're weak in making product, but they don't care. मतलब मुझे कुछ भी दे दो मैं बेच के आऊंगा. And I've seen this truth, what I would say, across the board actually, speaking. So what I would end of the day look at is the ability of the founder to execute, and trust me, is not easy. To an extent, I'll give you a live example. In a company doing 20-25 crores of revenue, not profitable, people from IIT IIMs and the top quality, uh, how do you start your day, or how do you start your week? And trust me, even as simple as, what are my 10 priorities which I want to clean this in this particular month? Or what are the 3 things which will help me to focus on? Or as simple as that, booking my calendar and having a credence of doing these 10 things again and again. Or as simple as that, boss, if it is a sales focus, sales I have to do every day, I have to go through the same MIS again and again and again. It's so boring. It's extremely boring because you're doing the same thing again and again. But that tenacity is extremely important. And trust me, I've seen people from Harvard, NM, IMs, that 3 brand doesn't make a difference. It's your individual personality which changes. And that is so critical. So we do get into some as basic question is how you have been managing your day, how you manage your team. Because these are some of the things which actually makes a company fail. It's not about money. Trust me, in my experience, 90% of the company don't fail because of money. Actually, it fails because the ability of the founder on to make a difference with the changing environment, changing behavior, changing everything. And that they're not able to adapt it. They're not smart enough to do very, very basic things, which we think is basic, but they don't think. It's as simple as that. It's a mindset more than anything else.
Very true.
Amit bhai, I'll just kind of add to Ravi's earlier question as well. So in pre-seed and seed, right, the approach would be different for different sectors and different startups. So for example, for consumer brands, even for pre-seed, they'll need to show some traction because there's not much upfront cost to build the product, right? So it'll be very context driven and situation driven. So for example, if you want to build an AI startup, you want to build an LLM model from scratch, that will take like millions of dollars upfront just to get the hardware which you need to build the enterprise, right? So that's a different story. But on the other hand, if you want to build like a regular startup, a regular technology startup these days, right? It's very easy with all the low code and the no code tools which are available. It doesn't even take like 10, 20 lakhs these days to get your MVP out and rolling. Compared to like, 10, 15 years earlier, when Flipkart or Paytm first started, they did not have these low code, no code tools. And they would take like crores of rupees just to build their MVP. So that is why, it's very contextual and you need to kind of, figure out which industry that the startup is in and accordingly decide, what state that they need to be at. For example, if there's a consumer brand who's looking to raise funds before reaching like 2 CR of revenue, right? I'm like, pehle bech ke to aao, because you've not even proven that your product is selling in the market. And the same thing for a tech product is completely different. So that's why, you need to be very careful in terms of discerning which makes sense and which does not make sense. I hope that adds to, what Amit bhai already mentioned earlier.
Yes, yes, absolutely. So we need to consider the sector in which we'd be investing as well. Got it. Yeah, totally makes sense.
No, absolutely. Absolutely. Any questions?
Yeah, Kapil here. There is a
Yeah,
slide where you mentioned that the turnover and the kind of valuation that you put at nascent stage or pre-seed level. So how are the supply demand metrics? Because obviously someone who has an idea on a paper, right? He doesn't has money, and the guy who has proven, say he is doing 20 crores, right? He has now proven the model. He has revenue coming, so he has more options. So for an investor, the opportunity lie at the second or third stage or at the early stage? How do you guys figure that out, and how do you divide that? How much of the fund we will deploy at paper stage or at a very early stage, and how much fund we will deploy when they have proven the model, etc.
See, Kapil, this all depends on and I'm talking mainly from an individual investors like us, right?
Yeah.
It depends on the pool of capital that you have, right? And the risk appetite. Because if you have a higher risk appetite, then you will put more and more money in early stage company, or your mindset is, yeah, I want to put 25, 5 lakh, in different, I would say areas I want to invest because I want to see, I like to see different startups and different investment, because that's your liking and hopefully few of them will do well. Or it could be, I want to make money and this is just good matured company and let me put 5, 10 lakhs. And many times, by the way, some of this 20 crores or 50 crores matured company may not even want to take money from angel investors unless until you are a celebrity or you're writing a bigger check as well. And then third part out here is we seeing a lot of the startups, which includes NSE and other areas where we see a lot of VCP platforms have got developed where you can do secondary transaction of this. So it all depends on your appetite. Like giving you my perspective, I would NSE is outlier, right? If you want to invest in NSE, is the most safer stock in my opinion. But if someone says, hey, you invested to Zomato 5 lakhs just before the IPO, I'm not sure whether I want to make an investment because I really don't know whether it's rightly priced and multiple factors. I would rather put my personal money in the 20 companies. If I want to put about a crore, 5 lakhs in early stage A, I learn a lot. Hopefully, even one company delivers 20x, which is possible in a very, very early stage company, I can actually get my capital. And if two, then I will get lots of returns. And it's more exciting as well rather than investing in matured company where you don't get to know. Here you talk to 20 startups, you learn something, different sectors, different industry as well, Kapil. So I would say it's all depends on the individual risk appetite and ecosystem.
Thanks a lot. Thank you.
Yeah. Any questions, guys? Okay. I think we got about
Amit bhai has raised hand.
Yeah, sorry.
Hi, Amit and Harsh. Hi, this is Amit Rege here. Harsh and Amit, this is for either of you all. What is the exact difference between an angel investor and an investor which comes in at a pre-seed or a seed level stage? The reason I'm asking this is that, there are a lot of angel investors who keep posting all over LinkedIn and various other platforms that, hey, we love to invest even at the ideation stage and blah, blah, blah. And then when you go and you start talking to them, they ask you, bhai, revenue kya hai?
Sure.
You
Yeah.
clearly are identifying yourself as somebody who wants to support founders at a very, very early stage, even before revenue has been, established. Let's consider this, that you've got a very strong pipeline. You already got a product. You're running, pilots at, I come from the AI space dealing with BFSI. All right. So, this is something which I find very odd. I mean, do they do this just to, get in touch with more founders and actually figure out what's happening and make informed decisions to invest at other companies where they've already had discussions? Or, is this like, a contradictory behavior by, quite a few angel investors?
See, all these are, as I mentioned, all these are different terminologies which people are using. And let me again now, within the angel ecosystem, let me put little buckets. Then there are some celebrity angel investors, right? And they're generally who have made tons of money, and we know Kunal Shah and a lot of these names, and they just want to put 5 lakhs. Chalo, this idea, let me put, and they do it.
Yeah, spray and pray type of attitude.
Yeah, and they're the guys, they do it for multiple things. One is giving back to the ecosystem. B is they want to create their own brand everywhere. 3 is they learn from early stage companies within the some sector. So there could be multiple reasons why they're doing. That's one sort of bucket. Other is there are a lot of angel networks, as you know, which have got created out there where someone will say, hey, NMM is an angel network, and it could be for common cause or ecosystems, whether it is venture capitalists or this. So that could be a pure business approach of angel ecosystem. The third would be, in my opinion, there are a lot of individuals who want to get into this angel areas, but probably they don't want to be part of the ecosystem for multiple reasons, which I'm not sure why as well. So what I would say, and by the way, let me put it differently. When even a VC fund like us is investing a 10 crore check, or even Sequoias of the world are putting 30, 40, 50 crore check at a concept stage, it's still early stage, right? And we will not call them angel but we just have a VC money putting in this. So there are different terminologies used from, I would say, different perspective. And yes, there could be few folks who just are doing fishing just because they just want to enjoy. And so we'll always see a mixed bunch of people around with different things on this.
Amit, just to add on to Amit bhai's point, right? So
Got
I
it.
would not kind of focus much on the terminology side, but more on the kind of the opportunity side, right? So most people, if you want to do it pre-revenue, it would only make sense if it is like a deep tech startup or something very unique, right? So recently I had pitched from a medical device company. They already had US 501(k) patents approved, right? No, sorry, FDA approval in place. Now to get those FDA approvals in place, you need crores of rupees upfront. And for medical devices, unless you have that kind of approval in place, you cannot even sell in the market. So it is those kind of companies which get money pre-revenue, because you need that kind of money just to launch the product in the market. But on the other hand, as I mentioned earlier as well, that if you're a regular consumer brand and you want to just kind of run Facebook ads, for that you don't need a pre-revenue money. For that you need to have that. So as I said,
Got
it's
it.
very contextual. If you're building an LLM from scratch and you need to get those exclusive NVIDIA chips, which are very expensive upfront, then that's a different story. Then, pre-revenue makes sense. But if it is like just another regular tech startup, right? For that, it does not make sense to get, give them pre-revenue. For them, you need to show that there is a proof of concept, the demand in the market, and only then it makes sense that, an angel investor would look at it.
And Amit, since you're in the AI space, you are definitely must be aware that Sharvam AI raised some $45 million, and I'm not sure
Correct.
whether they
Correct.
are even in a at a revenue stage, right? So some
Correct.
of these facts are also there, which we need to be aware of.
Yeah, yeah. I mean, point totally bought. My second question, which is why I raised my hand once again, is that once the investors have, you're discussing with them, you've reached the IC stage and stuff like that. They're asking you, what are your bigger plans? Is this IPO bound? Are you planning to hit the MENA markets, the Southeast Asia markets? And we've got this question a lot because we deal with the BFSI ecosystem in the country and with AI solving a lot of problems. Is this primarily because they want us to, land and expand really fast? Or is this because, just like what happened with the gaming industry, they see that, suddenly one day RBI could just get up and just say, hey, I don't want you to do this. And from tomorrow, we're screwed. Is that why they want us to kind of spread our risk and not be completely dependent on the Indian market? Or is it just a general attitude to say that, oh, we've also, moved into the Southeast Asian markets and, we moved into the Middle East markets and blah, 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 just for, cosmetic or optical, those kind of fancy things? Because the way we're
Uh,
looking at it is that India is such a big market for BFSI across banks, financial institutions, NBFCs, capital markets, insurance, etc., etc. There's so much work to be done in the country itself before you go out to other geographies. Does it make sense kind of, looking at other geographies at such early stages while we are still, in the process of launching, and doing deployments at banks and running POCs at various other financial institutions? What's your take on that?
See, my take is simple, Amit, on this is that uh, India definitely is a large market, but it will depend on a product, right? If it's a B2B product, and let's take it in the BFSI on the treasury management of it, okay? We know that probably the adoption of technology in India may take time. And at times, many people say that, I would sell a software to HDFC or ICICI Bank, probably they'll give me uh, 1/10 of value, which probably a GCC or a Europe or Asia or other markets will do, right? But at the same time, if someone is selling a supply chain finance product, they say, why I don't want to go outside India because the supply chain finance ecosystem is so different in different parts of India. I would rather focus in India and explore that ecosystem. Purely as PhonePe, right? PhonePe technically can't move outside India because the entire thing what they've created is because of
Correct. Correct. Correct.
the UPI piece, right? So I would say, what Karo, my personal take to almost everyone would be is that look at your business, look at your product, look at what you want to focus and create, and see which is the right market. If India is the market you believe in, do it. Just don't move out of India because an investor is saying, or just because you want to prove that ये diversification भी अच्छा होता है, वो मत करो. I will never.
Yeah, yeah, absolutely.
And then idea is that
No,
don't.
no, no. Amit, my thoughts are the same as yours. My thoughts are the same as yours. I just wanted to know whether there was a different take on this, which we probably as founders did not know. And considering that AI for banking and BFSI is, I mean, I can't call it new, but it's rather in its nascent stages across various financial institutions, and nobody really knows how it's panning out. So this is why investors are asking us to look at different markets just so that they hedge their own investment risk.
No, no, yeah. One thing is there, and is there that end of the day, while we as an investor believe we know it all, the founder also know it all. It depends on what hat at what time you're wearing, and both have to be open and flexible on that situation, right? Is how I
Yeah.
would put it. It's a debate, it's a logical discussion which you have to do. So, for example, I have a supply chain finance company. While the opportunity is very large, global, but he's just focusing in India. He said my roadmap is not only providing a BaaS product to banks, but I don't mind even creating a BC product where I will be part of the not only the technology revenue, but I want to be part of the risk and be part of the lending revenue. But that's the model he thought of it. If he's moving to that model, it doesn't make sense for him to move out of India, right? So it depends on the founder mindset as well.
Got it. Got it.
And Amit, the situation is very contextual to each and every company, right? So one of my friends, he actually raised funds from Axel, right? He's a Series B portfolio company over there. Within India, he captured the market within 1 to 2 years, and he's like, "Abhi meko expand karna hai." So directly looked at the US, which is a far bigger market. So that is why you need to kind of see where you're placed at and whether it makes sense or not. The other company, which is my client company, Neocred, which I told about, right? They are also in the BaaS space. The problem is with the RMG ban, they were hit very aggressively. For them, now it is very urgent to kind of move it outside. But the same thing, had they done earlier itself, then the risk would have been significantly mitigated, and they would not be in the kind of vulnerable position that they are in right now. So that is why we need to kind of exactly understand where your situation is, which kind of value add you are doing. Also, what kind of timeline it takes to close the contracts, because selling to banks in India, there's a huge pain in the ass. Right? It takes 6
Slow,
months.
very slow.
The process to close the sale is slow. Their APIs are slow. They are using ancient Wipro TCS ka software, 15-20-year-old software, to get APIs to integrate with that, to connect it to that. Not easy.
All legacy shit frameworks in banks.
Exactly. And the same if you look at BaaS internationally, right? The way the Middle Eastern markets, the Moroccan markets. I know so many Moroccan startups are doing so phenomenally well in the BaaS space, right? So that is why there are multiple factors which you need to consider. Just because the VC is saying that is definitely not the factor to consider. But look at your business as a whole. Technically कहाँ बैठ रहा है, deals close हो रहे हैं या नहीं, बैंक से पैसे आ रहे हैं या नहीं. Because the Indian banks have a very monopolistic mindset. उनका है कि खाली हम बैंक पैसा कमाए, हमारे थ्रू किसी और को पैसा जाना नहीं चाहिए. So you need to look at all those factors into consideration and then decide whether you want to expand internationally or not.
I completely with you, man. Bank is a casino.
Exactly. Only the casino organizer will make money. No one else will make money.
Only the house wins. Nobody else.
Yes, 100%.
Okay, thanks, sir.
Sure, happy to help.
Quickly, in the interest of time, I'll have the last two, I think, couple of slides is there. How to make investments, and in my view, there are two ways one can invest. One is invest directly in the company and you become a shareholder, or you invest through what is called angel fund, which is clearly been defined by SEBI as category 1 fund. So both are the possible part of it. Yes, there are times when we have seen people have also created SPVs, whether it is LLPs or private limited companies, and pooling the capital to do it. But my recommendation is either you invest directly in the company, both from a regulatory as well as tax, or you invest through a vehicle which is SEBI registered, because that is the most cleanest way of doing it. And if you're going through the angel network, or you're going through this SPV, which if you're going through the SEBI registered, I think they do conduct all different types of due diligence, ranging from financial, business, legal, founders background. And they have got used to the entire term sheet or the legal agreement which they get executed with the investors as well. And then obviously, there are tax compliances and all this which needs to be done. So my personal recommendation would be is, I'm not talking about exception. There could be always an exception, but either ideally you should invest through the angel network, or invest through some of these SPVs of the world, because someone out there will lead and take care of a lot of these things and ensure that SEBI taxation and all this have been well taken care of this. And I think how investors make returns, I think we did discuss through M&A, through IPO, selling to the large private equity funds, multiple other things, is where you will make money. But I think this is the end of the slide of this particular presentation. And idea, as I mentioned to you, idea was to just sort of give you an overall and a little bit of a perspective from different angles. And obviously, depending on the need of the audience, we can go quite deep on, let's say, we know that founders are there, they want to understand how to raise capital, and what are the legal terms or term sheet and all this process. One can do this, and I'm sure Harsh can even do this, or we can have other guys also take care of it. So there are different ways in which we can cover this. Obviously, this was mainly to put from uh, investing perspective, but still give you an overall ecosystem what's around as well.
Guys, anyone has any questions you would like to ask? Anything over, everything that we covered today, anything of that sort?
Yeah, there is the use of AI, the use cases where I feel AI has been true force multiplier. See, definitely AI is going to make a difference, right? So I'll give you our example. Every day we get 2 or 3 investments with us. And what our process would be is we got this company's deck. We open the deck every Friday. We have this meeting. We go through some 30 to 70 decks and then say, oh, this company, let's not waste our time. This company, let's have a 15 minutes call. Oh, this looks interesting. Let's spend 45 minutes, right? With the founders. That's how we divide. With AI, we do believe that opening 70 deck will not be required. And we are developing in-house as we speak. Any help, always please reach out to me because we want to see how effectively we can reduce the time to evaluate because we know what are the 10 parameters to look at. If the deck doesn't have this 10 parameter, let's not waste your time because we're getting a lot of deals right out there. So that could be one case to evaluate deals. What we do is before and after is earlier you used to every meeting with the founders we have a minutes which we would physically write it and that would be there. But because of AI coming in, you've stopped writing these notes and spending time. AI will put a summary, will be detailed note, there'll be a summary. We just ensure that is kept in a repository to refer to some of the notes because many times when you have 2 or 3 meetings, founder would have spoken or given a feedback on a particular situation, and the same situation would come out with a complete different approach, which could be a berserk. And that's where consistency of founder also, I would say, make a huge difference. I think Amit, thank Ravi, that's what we are doing. Yeah. But otherwise, I will just put it on the chat, my email ID. Well, we all in the group, but you can always reach out to Harsh, me, or whatever, in this aspect. Basically, in anything on financial services and education, I would love to uh, engage. And since we are a small group, we also learning AI. So someone who is j- can be who is an expert in AI. I don't mind having a workshop for my team as well, because we are also trying to see what are the different tools and AI can do. And we are calling what we are inviting different people at our offices to spend between 45 to 1 hour and educate us on different ways to look at AI as well. And it's quite emerging, it's quite evolving. So we also sort of enriching ourselves both technically as well as from a business wise as well.
So, Amit, if you need help on that, let me know. I'll be happy to have my co-founder, who's I am 51 and he is 26. Okay, so he's the head of AI for the company, and he'd be happy to conduct this workshop with you guys, and just let me know when you want to schedule it.
Oh, awesome, Amit. So I just dropped an email on my email ID on the
I
chat.
got it. I saw it.
If you can just drop an email or whatever it is, and absolutely, we'll organize it because these are the learnings for us, right? We have to update ourselves. Interesting, we as an investor have to update ourselves on marketing, compliance, legal, different types of tools, networking, technology, everything, because it's quite evolving. And when we work with the founders, we also have to be sure what the new edge or what are the different ways things are working on, right? Like giving an example just for a discussion, it's a matter of time when we will see the Google search is dying or meta search will die and chat GPT search will come up and ad will be out there because that's a better way to hook a customer or have a product available out there. So are we chat GPT compliance or not? That's the question which keeps on asking.
Yeah, now that's the new thing evolving. I think instead of SEO, which is search engine optimization, it's folks are looking at LLM engine optimization. Like, you want your results to be shown up in the LLM, not in just in the Google search.
Yeah, but the search engines are doing it themselves. I mean, right from Google to Meta to everyone is also giving you a prompt over there to say, use our AI thing to check it out rather than go through the traditional ways of doing it.
Yeah.
Right. They have already integrated that. I mean, on the Google search
Yeah.
right now, you can see in
Gemini is
the
inbuilt over
search
there,
bar
so it
itself.
becomes very easy to generate results over there itself. And Gemini is actually very good as well in terms of deep research.
Yeah, I think Gemini also launched a ad yesterday or day before, a couple of days back, which said that I think their 2.5 version has been made free for all students and things that way. So they're doing a lot. I mean, Perplexity tied up with Airtel for free or pro subscriptions and things that way. So there's all this stuff being done. Yeah.
Correct. Guys,
Amit, one last question for Amit or Harsh also, both of you all, since you all are seasoned investors and stuff that way. We've been talking to a lot of investors. Oh, by the way, we've got our term sheets and everything, the DDs on and stuff that way. But this is something I never figured out from a couple of investors. Two things. One is that the investor says, yes, I will invest. Okay. And then you give him a lot of details about your company. And then the investor suddenly ghosts you. Now, is this a common practice with a lot of investors because A, you don't have the time, or B, because it's just part of your personality? I mean, a simple, hey, I changed my mind, or no, we're not going to do it this time, is a simple, polite, and ethical way of responding to anybody. Point number two is that even if you decide to come on board as an investor, I have a say in how much salary the founder can take. Either the founder takes in, peanuts, or, they say that the founder should not take anything at all right now. Is that a clear sign to run away from that kind of an investor? Because, hey, I can't live on love and fresh air.
No, so I think let me answer this because this is the two things which we've been very mindful and aware of as well. The first thing is that A is absolutely impolite for anyone for that matter to just vanish, right? And we would never do it. In fact, to an extent, there's a protocol in our company that even if the deal is coming through the banker, say no to it, but respond, right? Because if you don't respond,
Correct.
it's unfair, right? And say respond if you don't like, no, right?
Yeah, and
I
it
mean,
says a lot about you as a person.
if I'm not recording on this, can we just stop recording this show because I don't like. Let's be honest here. You need to have the balls to say no that you change.